Okay, okay, sir.
Okay. Okay, Shrikant. Okay, can
Good
you
evening,
explain
sir.
me what is good evening? What is the order to cycle? Can you explain me order to cash cycle?
Yes, sir.
Yeah, you can tell
Sir,
either in
order
English or
to
Tamil.
yes, sir. Order to take this four applications involved, sir. Oracle order management application, account receivable application, cash management application, and inventory manage application, sir. And while coming into this, at first order management, sir, where all the orders has been managed, where full order process has been takes place in it, and it comes to the credit management, where in this credit management, it looks upon the customer's credit limit and whether he can repay the amount or not. It checks in it, and after that it goes to the order fulfillment. In order fulfillment, it takes place uh, whether the order has been.
Sorry.
Sir?
Yeah, sorry.
Okay.
Yeah. I'm sorry.
Yeah, tell me. No problem.
In order fulfillment, it checks whether the order has been completely done or not. It is being checked in it. After that, it goes to the shipping process and transportation, where in shipping and transportation, the order is sent to the individual person who has been ordered, or to the company who has been ordered the product. It is sent to the particular company. After that, coming to the invoicing, where in invoicing is a type of giving a receipt or something else for what we buy the product. So in invoicing, it gives invoicing about the product which we buy, and later on it goes to the account receivable. Account receivable totally stores the invoice and invoice and receipt which the process has been done,
This
and later on
PPT you prepared or you taken from something?
Sir? Sorry, sir?
You taken from something or you prepared one by one? This
No, sir. This I got it in one of the documents only, sir. The Fusion documents,
because,
yeah. Yes, sir.
the order management, if you see, if you create an order, you create you are in order management module, okay? You create sales order.
Yes, sir.
It will check the credit limit, okay?
Okay,
so
okay,
credit
sir.
management is it will check the limit. If it crosses, it won't allow, and you are doing it. And when sales order is done, then shipping and transaction, then it goes to AR. AR module should come first, no? After that, invoicing. I don't know why they put the accounting receivable. So you start invoicing in AR module. Okay.
Okay,
so
sir.
here, order management is a module. Process starts. Okay.
Okay, so fine.
And here, because first step is credit management. If credit is there, only you can fulfill the order. Correct.
Correct.
That is
sir,
the correct flow. And here you put invoicing before accounts receivable. Actually, accounts receivable should come before that. So it is the accounts receivable module. In that, invoicing is the first. Then receipt should be coming. Receipt is collection. Receipt also should be there. I think one step. That is a collection.
Sir, there is a collection department, separate collection department, which takes care only for the collection of payments, no, sir?
Collection of receipts. Correct. But anyway, receipt should be created to collect.
Correct.
Suppose you are collecting a check. If you are collecting a check, collection department, you will enter the entry first in the receipt. Okay. After 3 days or 4 days only, you know that the check is bounced or not. Then collection department 1 second goes and do the dunning and everything.
Dunning, yes, sir.
Then the reporting comes. Okay, he understood clearly. Okay, sir. Anyway, good. Anyway, we'll see next in SCM module. No, you'll be understanding more SCM. Okay.
Yeah, that would be in detail. Okay, sir.
Yeah, it will be detailed. Okay, this you understood, right? Shankar understand one thing like that.
Yes, sir. Understood, sir.
Bill, customer, manage revenue, customer. This is very clear, no? Okay. Next, please. So what is auto log box, Shankar? Solunga.
Sir, just now try came late, sir.
I think no, sir. He didn't attend the class. He got into the class only with
joined
you. Yeah, he joined with you only. So he has missed all this. Sir. That's the reason.
I'll go through, sir.
Setu
I'll
sir,
go through,
சொல்லுங்க.
sir. No problem.
No problem. Setu sir, tell me what is auto log box?
Sir, I think he's not joined. I think.
Oh, he didn't join second time.
So yeah, I think he is having some internet issues because he was not even able to hear. He was not even able to hear my
So
voice
auto
also.
log box. What is auto log box in simple terms? In theoretically, you would have studied in financial management, right? See what happens at the end of the suppose auto log box. See, small industries and small people will have a current account and they to go to the bank, or bank will assign a person and they do the business. Okay. So auto log box is a person like this Saravana stores or something, does millions of business, counting cash itself, they will have to count in money, no? So what happened, banks at the end of the day, they will collect and deposit all the branches, and it's like Amazon, they are having throughout India, all the branches, no? They will collect and put it into their account. At the end of the day, from the system, bank system, it will remit into our system and create automatic receipt. Okay. Until that time, you don't know what is the collection. Our customers are scattered worldwide. Okay. So every day, suppose I assigned Citibank as my partner. So Citibank will collect on behalf of this Buddypower inTotech all the collections. So they will remit. So at the end of the day, it will all the collections will pull to our system, and then it will create a receipt. Okay, that is called auto log box. So you are manually not creating anything. Okay. Only system is creating all the credit transactions. Credit in the bank, it is our debit. It is our receipt, right? So there is a code, it is creating auto. So you will not create manual. That's why she divided auto log box, manual receipt. Okay. Manual receipt, accountant manually types. Auto log box created by the system via spreadsheet. Via spreadsheet means you can maintain in the spreadsheet and a single click you can upload. There are separate tools like more for apps, WebID and all in GL. That's it. Okay. Okay, Srikanth, understood?
Yes, sir.
Okay, thanks. What is smart receipts, man? You entered smart receipts?
Yes, sir. This is basically, automated cash application solution, which provides an, embedded intelligence, and it is basically focused to do list of transactions like, receipts and other activities which require, immediate attention. So basically it helps in, creating and updating customer receipts. It increases the user ability to process payment and send spreadsheets to the reviewers and approvers, sir. So this is a feature which has been added, which I got it in the Oracle.
Added in the Fusion.
Yeah,
so
Fusion.
It is an additional feature. See,
yes,
all
sir.
other things is R-Tool also, it is available
yes,
at Lavani
yes,
also.
This is
a Fusion added
Fusion
thing.
feature. Yes, sir. Yes, sir.
So when you work practically, you will understand. Okay.
Yes, sir.
Entry
Yes, sir.
question and all you can tell if you want to attend. You can tell them this is an added feature. Smart
Correct, sir. Yes,
okay,
sir.
Okay, ma'am.
Okay,
so
sir.
You finished, right?
Yes, sir. This I finished.
Okay, next. Flex field. See, what is flex field means in the general ledger you would have read. You remember Shankar, how many Shankar or Srikanth, how many flex fields in GL?
3, sir. 3 flex fields.
Can you tell name?
Yes, sir.
Anything you remember both of them? How many flex fields in general ledger? At least one.
Key flex field. Key flex field.
See, in general ledger, accounting key flex field. Okay. See, there are two type of flex field in Oracle. One is key flex field, and another one is descriptive flex field.
Sir, there is one in Fusion. Sorry, sir, to interrupt you. There's another, extensible flex field, sir. Which,
correct.
Fusion. Yes,
correct.
Sir.
Okay, 3 flex field. Okay.
Yes, sir.
So the key flex field, without that, your module cannot run. Okay. I think in AP, how many is there? AP, nothing is there.
AP, nothing is there, sir. Only GL,
no flex field.
GL
So
asset.
without sale tax location and territory flex field, your AR you cannot do. So that's what they given, build to site. Okay, build to site and all. So with this example, and if you keep in mind and read, you will understand more. Salesman ship to site. What is ship to site? It is added here. Okay.
Yes, sir,
So
in
build
the
to site
territory.
probably it will have a build to and ship to. Okay. See what is build to and ship to? Suppose you imagine HCL. HCL is having thousands of location across India. Head office in Chennai. The accounts is maintained in Chennai. All the people's salary will go. So the build to site is Chennai only everywhere. But the ship to site, suppose they are buying 1,000 computers, the bill will come to Chennai. That is build to site. But they will say ship to Kolkata. The shipping will be changing. That is optional field. Okay. Bill to site is a mandatory field. Without that, you cannot create an invoice. Okay. For service and all, you don't need ship to site. Services like orders, this tax consultants and all, service are delivered only without the physical distance, right? So only bill to site is mandatory. In that case, you can understand. She explained well. You understand sale tax location and territory, right? Okay. Okay, ma'am.
Okay, sir.
Receivable accounting. This you are taking, right?
Yes, sir. I finished this. I was about to just take the accounting structure. I was explaining what these accounts are, and I'll be showing the example. Yeah.
You can go back to the last.
Oh, yes, sir. Yes, sir.
So here, if you see subledger accounting model, see the subledger is invented. It came in picture in R12. It is an accounting engine. So that is why next slide she explained. See, in AP, you would have seen invoices, correct? In AP, we call invoices and invoice type. In AR, to differentiate, we call transactions. See, transaction. Okay. So even though here also invoices, we call all transaction. See, transaction type, invoice, credit memo, debit memo, charge back, guarantee, deposit. And receipt. Normal receipt and miscellaneous receipt. What is miscellaneous receipt? If you receive some bank income, bank interest and all, it is not connected to business, right? So it comes to miscellaneous. Okay. And what is adjustment? Suppose I have the invoice of 10,000. I receive from my customer 10,000.50 pice. Okay.
Rounding up.
So 0.50 will be there always. And your SOA statement, right? And aging balance always show 50 pice plus or minus. So we create an adjustment invoice. What is adjustment invoice? It won't disturb the existing invoice. Just it will create an entry. Adjustment is an expense account or account. It is like your bad debt or some expenses, some rounding of account, right? So adjustment invoices, it will be creating an entry like debit adjustment, credit the receivable account, vice versa, receivable to adjustment. Okay. So bills receivable, same as transaction. What are the type in the transaction? Invoice, credit memo, everything will come under bills receivable. If your company is having bills receivable, you have to set up separately for that, like that. Okay. So that's what is given. Create, update. See, only adjustment don't have update because it is for minor charges. Immediately it will create and it will vanish. Okay. Okay. Clear? Okay. Okay.
Okay, sir. Yeah. So I had finished till unbilled receivable. I'll just talk about unearned
auto
revenue.
Accounting also. Okay.
Yeah.
Okay. She explained field by field very well. Okay. See, what is auto accounting? You know, initially the first slide, order to cash cycle, right? From sales order, it is automatically creating an invoice. See, suppose you create a sales order after 5 or 6 months, sales happens for big industries and all. Okay. So what happened in real company? The accountant will once again type or write the invoice. Okay. So 99% sales order and invoice will have the same information. You write the customer name, customer address, item, and everything. So here the auto accounting pulls the sales order and it is created automatically in the AR invoice. That is so for that, what are the fields required? That's what it is given here. What is the customer to bill site, salesperson, yes or no, transaction types. So there, if you select invoice, here also it will come as invoice. There it is credit memo, here credit memo. Okay. Tax code. If it is a tax code is there. Suppose a VAT is there in the sale order itself, you will add the VAT 18%. It will automatically add a line VAT accounting. Okay. That is that. And what is the auto invoice? Auto invoice setup we have to make. See, auto invoice, there is some setups to be made. what are the field? No, constant, customer to pilot. These are the basic mandatory fields we have to make, and some technical help needed, some technical formula, because it has to pull from one to other, right? So once the setup made, once you have to run the program for order management, that will push into the AR module. So these are all the types what's given: freight, receivable. These are the line type. In one invoice, you will add, you will add a revenue line, you will add tax line, you add a freight line. These are all you have to give your accounts in the setup transaction. One field is there. If you give it, it will come. And bill receivable. Okay, ma'am, carry on.
Yeah, so I'll just continue, tell what unearned revenue account is, and then I'll just show the examples. Yeah.
Okay.
So basically, see, your Oracle receivables uses the unearned revenue account for transactions that have invoicing and accounting rules. Okay, so I'll be talking about invoicing and accounting rules in the upcoming slides. So if your accounting rule recognizes revenue after your invoicing rule bill set, like say your bills in advance, okay, then here receivable posts this amount to your unearned revenue account. So here, if you select, the salesperson or, standard item, the revenue flex field, like the salesperson, see here, it's a revenue flex field, right? That the revenue flex field that you specified in the setup will be used, for unearned revenue. So say, for example, see here, you may have 4 segments in your accounting flex field, like your company, your department, your company as a 01, okay, 100 can be your department, and this is your account, and this is your product. So with auto accounting, you can specify that the first segment is a constant. Okay, this will remain constant, right? And then your second segment is determined by the salesperson. Say, okay, like it's determined by the salesperson. Okay, that is your department segment that you have assigned. All right, and the third segment is determined by the transaction type. Okay, and the fourth segment is determined by the product. So let's just we'll look into the next example where you'll get a clarity about it. Okay, see, now if you want to define a 4-segment revenue flex field, you can create defaults for each segment. Now here the first segment can be constant, which is 01. Okay, this will not change. You have given in a setup as constant. And the second segment can come from the sales person named John Doe, right? And the third segment can come from the transaction type, which is a standard invoice. And the fourth segment can come from the standard line, okay, which is a 20 megabyte hard disk, which is your product. Okay, so you can say the salesperson John Doe enters a 1-line standard type invoice for a 20 megabyte hard drive. Yeah, so this is how you read it, right? You remember how we had assigned all the values for all the code combinations. That's right. So you're clear with this? Yeah. So you want to add anything, sir? Here, Suresh sir.
Nothing. Please proceed.
Okay, sir. Fine. So now we come to accounting rules and invoicing rules. See, invoicing rule and accounting rules basically lets you create invoices that span several accounting periods. See here, accounting rules determine the number of periods and percentage of total revenue to record in each accounting period, whereas your invoicing rules determine the accounting period in which the receivable amount is recorded. So basically your accounting rules determine the accounting period or periods in which the revenue distributions for an invoice line are recorded, whereas your invoicing rules determine the accounting period in which the receivable amount is recorded. Yeah, so then you can assign invoicing and accounting rules to transactions that you import into your receivables using auto invoice and to invoices that you create manually in the transaction window. So here accounting rules, under this, we use this accounting rules to determine revenue recognition schedules for your invoice lines. Now you can assign a different accounting rule to each invoice line. So accounting rules let you specify the number of periods and the percentage of the total revenue to recognize in each period. You can also specify whether the accounting rules are fixed or variable. Okay, like fixed or variable duration. So accounting rules of fixed duration span a predefined number of periods. Then accounting rules of variable duration let you define the number of periods during the invoice entry. I'll be showing you an example of accounting rules and invoicing rule in the next slide. I'll just explain in depth of what invoicing rules also mean. So you use invoicing rules to determine when to recognize your schedule for invoices that span more than one accounting period. Now you can assign one invoicing rule to invoice. The invoicing rules determine when to recognize the receivables for the invoices that span over multiple accounting periods. So basically there are two types of invoicing rules, which are the bills in advance and bills in arrears. Okay, so here, as you see in the example, okay, this is the bills in advance entries. Okay, so here the bills in advance rule is used to recognize the receivables at the time when the bill is raised. So this is an invoice created before the revenue is recognized. Okay, you can see here the invoice for $3,000, wherein the invoicing rule is bill in advance, and your accounting rule is 3-month fixed duration. Yeah. So here in the figure, you can see the company provides services to the client and has entered into a contract for 3 months. Okay, Jan, Feb, and March. Now, then you should recognize the revenues in that particular month, even though you may have received the payment. The invoice raised is a bill in advance, and revenue is recognized in the 3 months ahead. Okay, which is divided into your 3 months, Jan, Feb, and March. Okay, so here in Jan, you raise an invoice. Sorry, my mouse has freezed. Yeah, here one second. Yeah. So here in Jan, you raise an invoice of $3,000 for a 3-month contract. Okay, then the accounting rule is 3 months fixed duration. Okay, and the entries passed for this invoice are like in Jan, when the invoice is raised, the receivable account is debit $3,000. Okay, and unearned revenue credit $3,000. Now you come to know, now you can understand, you can relate with that unearned revenue account, right?
Yes,
Shrikant? Yeah, okay. Okay, then okay. Then you receive a payment of $1,000, okay, in the month of January. So then the entry gets reversed, okay, and the unearned revenue debit is $1,000 and revenue account is credit $1,000, right? Same in the in the month of February, when the invoice is raised, okay, and the entry will be like unearned revenue debit 1,000 and revenue credit is $1,000. And same thing goes to your next month, which is your March. Once the payment is received, and the entry would be passed like unearned revenue debit $1,000 and revenue credit $1,000. So this is how you'll be giving your invoicing rule and accounting rule to your invoices, right? So this was bills in advance entry. As I said, invoicing rules has two options. One is bills in advance and then bills in arrears. So let us look into how the bills in arrears work. Okay, so this is the bills in arrears example. So here in the bills in arrears, you use the bills in arrears rule. Okay, if you want to record the receivables at the end of the revenue recognition schedule. See here, you can see the invoicing rule is bill in arrears and accounting rule is 3-month fixed duration, right? So here in the example again, invoice of $3,000 is raised for a 3-month contract, and the accounting entries are passed like this. In January, when the invoice is raised, the unbilled receivable debit $1,000 and the revenue credit is $1,000, right? Then in February, when the invoice is raised, the unbilled receivable is debit $1,000 and the revenue credit is $1,000. And finally, in the month of March, when the invoice is raised, the unbilled receivable debit is 1,000 and the revenue credit is 1,000. The receivable debit 3,000 Okay, and unbilled receivable credit is 3,000. So then you need to once you post all these entries, then you need to run the revenue recognition program, to generate the revenue distribution. So this is basically how your invoices and accounting rules, once you set up those, it automatically does these entries in the system. Okay, so that is your basic idea of how the accounting and invoices rule work, right? Okay, so any doubts here?
No, ma'am. No.
Okay, it's clear, right? Okay, fine. We'll go to the next slide, which is the statement cycles. Okay, so you define a statement cycles to determine when to send statements to your customers. Okay, so you assign statement cycles to customer and site level profiles. So if you print statements for a specific customer, then if you have defined a statement site for the customer, Oracle Fusion Oracle Fusion Receivables uses the statement cycle defined in the customer account profile as the default statement cycle to use for printing. And suppose if you have not defined a statement site, Receivables uses the statement cycle defined in the customer site profile for each applicable bill to site included in the print run. So then if you do not select a customer, then Receivables prints statements for all customers that have a statement cycle that matches the statement cycle you enter for the print run. So when you create a statement cycle, you define the interval to be used for the cycle. Say the interval can be weekly or monthly or quarterly, okay, and the dates on which to print the statements for the cycle. So you can also indicate if receivables should even skip certain statement dates. So you can do all those basically you can set all those rules during your setup process. Okay, so receivables includes all activities from the last time you printed a statement for a particular customer to the current statement date. So even if the customer statement cycle is set up to skip, printing on sorry, one second. Yeah. So printing on one or more statement dates, receivable also includes open. Sorry, I think I'm just one second. Yeah. So here the receivable also includes open debit items from prior periods in the statement. So see, let's look into the scenario here. The system date is given as 3rd September 2020 and the statement date is given as 1st September 2020. And the previous statement date was 1st June 20, where you have given us a setup for skipping it. Okay, and the statement cycle is quarterly, right? So the activity included in the statement spans the date statement which was last printed, that was your 1st March 2020, to the current date, which is 1st September 2020. The previous date, the previous system dated 1st June 2020 has been skipped, right? So the activity for that period now shows on the current statements. Okay, this will definitely show in the statement because this is come in between your last statement printed as well as your current statement date. Okay, and this is a table which illustrates the logic which is used to include particular invoices on that statement. Say if the invoice has been created on 28th Feb 2020, will that transaction or the invoice will be included in the statement or not? It will not be included, because unless it is either still open or was closed between 1st March and 31st August, as this was created on 28th Feb. So this will not be included in your statement. Then what about the invoice which is created during created on 30th August? This will definitely be shown in the statement because the invoice date is between the date the statement was last printed and the statement date. And what about the invoice date of 2nd September 2020? This also will not be included in the statement because the invoice date is later than the statement date. Right? This is more similar to, the way you get your bank statements, right? You'll be, is the same kind of a scenario. Yeah. So this is how your statement cycles run in your AR. yeah, so this was the main whatever I could, get the important topics in AR. So if you have any doubts, please let me know. Sir, Suresh sir, anything that I had to add in this? Hello?
Okay, can you go back where
Yes,
we
sir.
left? I didn't see.
Statement
Go to the
cycle, sir.
auto-
Yeah.
Go to the slide of auto accounting.
Yeah, here, sir.
Yeah, bills in arrear.
Yes, sir.
Okay. So you also thought bills in advance?
Yes, sir. This is here. Yes, sir.
So both you understood, Srikanth, what is bill in advance and bills in arrear?
Yes, sir.
See, what is bills in advance in generic? Bills in advance. Suppose this is the month of September. I am taking an AMC. என்னோட computer AMC போடுறேன். Okay, 1 year AMC க்கு I am paying 1,20,000 today. Okay, but the work has to be distributed for the next 12 months. Correct?
Okay, sir.
ஆனா பேமெண்ட் இன்னைக்கு ரியலைஸ் ஆயிடுச்சு. But the work வந்து இன்னும் 12 மாசம் இருக்கு இல்லையா? So every month நான் ஸ்ப்ளிட் பண்ணனும் 10,000. That is called bills in advance.
Okay.
Work 12 மாசம் நடக்கிறதால 12 மாசம் ஸ்ப்ளிட் பண்ணனும். சங்கர் புரியுது இல்லையா?
Yes, yes, sir.
So I have to divide into 12. So இதுலயே வந்து there are two types, fixed and variable. Okay. இப்போ சீசன் இப்போ இதுல வந்து எனக்கு சீசன் வந்து இப்போதான் மார்க்கெட் ஓப்பன் ஆயிருக்கு, கோவிட்லாம் இட்ஸ் ஓப்பன் வச்சுக்கோங்க. இப்போ டிசம்பர்ல ஐ எம் ஹேவிங் மோர் ஒர்க், நான் வந்து நிறைய டிக்கெட்ஸ் ரைஸ் பண்றேன், அவன் அலோகேட் பண்றான். ஸோ ஃபிக்ஸட்னா மந்த்லி 10,000, வேரியபிள்னா பேஸ்ட் ஆன் ஹவர்ஸ். டிசம்பர் இஸ் ஒர்க்கிங் ஃபார் 100 hours, டுமாரோ இஸ் ஒர்க்கிங் சம் மந்த் 0 hour, அது பாட்டுக்கு ஒர்க் ஆகும். ஸோ வேரியபிள்னா 1 month 20,000 ஆகலாம், இன்னொரு மந்த் 5,000. ஸோ பேஸ்ட் ஆன் பில்ஸ் இன் அட்வான்ஸ், அதான் டூ டைப்ஸ், இன் அட்வான்ஸ் இன் அரியர்ஸ் அதில் போட்டிருக்காங்க இல்லையா, இன் அட்வான்ஸ் இன் அரியர். ஸோ பில்ஸ் இன் அட்வான்ஸ் வந்து ஃபிக்ஸட் வேரியபிள். ஃபிக்ஸட்னா ஃபிக்ஸட் டிவைடட் இன்டூ 12 months ஆர் 36 months பேஸ்ட் ஆன் த ஏஎம்சி. 12 monthsனா வேரியபிள்னா எப்பெல்லாம் யூ கேன் அலோகேட் டிஃபரெண்ட் அமௌண்ட் பட் டோட்டல் இஸ் சேம். புரியுதா உங்களுக்கு? ஸோ எங்க இதோட இம்பாக்ட் வரும்னா, இது அவர் ஃபினான்ஷியல் இயர் வந்து இப்போ பாத்தீங்கன்னா யூஎஸ் எல்லாம் வந்து ஜான் டு டிசம்பர். ஸோ இந்த ஃபினான்ஷியல் இயர்ல எனக்கு எக்ஸ்பென்ஸ் வந்து செப்டம்பர், அக்டோபர், நவம்பர், டிசம்பர் 4 months தான் வரும். 40,000 ஃபிக்ஸட்ல போட்டா. ஓகே, ஆனா வேரியபிள்ல போட்டா அதிகமா வரும். ஸோ அடுத்த ஃபினான்ஷியல் இயர் மீதி கேரி ஃபார்வர்ட் ஆயிடுது இல்லையா? ஸோ அதர்வைஸ் டைரக்டாவே நான் அந்த ரூல் இல்லை அப்படின்னா, டைரக்டா இஃப் ஐ டேக் டைரக்ட்லின்னா இன்னைக்கே எக்ஸ்பென்ஸ் ஆயிடும். அதனால என்னோட ப்ராஃபிட் டவுன் ஆகும். அது வந்து கரெக்ட் அக்கௌண்டிங் இல்லை, அதனால தான் அக்கௌண்டிங் ரூல் கொண்டு வர்றாங்க. ஓகே, ஸோ தட் இஸ் வை தே சைட் திஸ் இஸ் ஹவ் யூ ஹவ் டு அக்கௌண்ட். அன்அண்ட் ரெவென்யூன்னு போட்டிருக்காங்கல்ல, ரெவென்யூ ஹஸ் கம் இன் அவர் புக்ஸ். உங்களுக்கு நீங்க பேமெண்ட் இது அன்அண்ட் ஆப்போசிட். நீங்க ஏஎம்சி பண்றீங்க, வி கலெக்டட் மணி பட் வி டசன்ட் டன் த ஒர்க் இல்லையா? அதான் அன்அண்ட் ரெவென்யூன்னு சொல்றாங்க. பாருங்க, டெபிட்டிங் ரிசீவபிள் இங்க 3 monthsக்கு போட்டிருக்காங்க. டெபிட் வாட் கம்ஸ் இன் ரிசீவபிள் அக்கௌண்ட், கிரெடிட் வாட் கம்ஸ் இன் அன்அண்ட் ரெவென்யூல 3 மாசம். ஸோ எவ்ரி மந்த் யூ வில் டிடக்ட் ஃபர்ஸ்ட் மந்த் பாருங்க, டெபிட் அன்அண்ட் கேன்சல் ஆயிடும். ரெவென்யூ வந்து அதுல 1000 எடுத்துக்குதா, நெக்ஸ்ட் மந்த் பாருங்க அன்அண்ட்ல 1000, அன்அண்ட் 1000. ஸோ ஃபைனலி அன்அண்ட் ரெவென்யூ வில் கெட் நில் அண்ட் ரிசீவபிள் ஆல்சோ நில் அண்ட் யூ வில் கெட் ரெவென்யூ டு ரிசீவபிள். தட் இஸ் த ஆக்சுவல் என்ட்ரி. ஓகேவா? Okay ma'am.
Next. Bills in arrears.
Bills in arrears also same format. Suppose you are having arrear salary before 5 years, now only total. Adu vandu it is not belonging to this year இல்லையா? It has to be divided from the year it has come. ஏன்னா இந்த இயரே போட்டாங்கன்னு வச்சுக்கோங்க. Suppose my yearly salary is 10 lakhs per annum. என்னோட arrear 5 lakhs வந்துருச்சுன்னா I will be attracting 30% tax flat. தேவையில்லாம 1.5 லட்சம் ரூபாய் போகும்ல. So எப்ப நான் ஏர்ன் பண்ணேன் 2015, from 2015 it has to be added. 2015, 16 அந்தந்த ஏரியா அரியர் அந்தந்த இயர்ல ஆட் பண்ணி டாக்ஸை ஃபைல் பண்ணேன்னா I will be ending up in 30 or 40,000 or 50,000. அந்த மாதிரி கரெக்டா எங்கெல்லாம் அதான் that is called the revenue. அதுதான் அக்கௌண்டிங் ரூல். எங்கெல்லாம் ரெவென்யூ கரெக்டா நம்ம பண்றோமோ அந்தந்த இயர்ல தான் அது பண்ணணும். அதான் ரெவென்யூ ரெகக்னிஷன் சொல்லுவோம் நம்ம இங்க. ஓகே, புரியுதா? இதுலயும் ஃபிக்ஸட் வேரியபிள் இருக்கும். ஓகே, ரைட். ஓகே மேம். Next what it is?
Sir, I showed the statement cycle, sir.
Okay, statement cycle வந்து நீங்க it is like how the customer statement cycle. அந்த இது வந்து அப்படியே இது ஒரு ரிப்போர்ட் தான் included in statement. அதெல்லாம் வந்து based on your company policy or your thing எப்படி வேணா பண்ணலாம். இது ஆட்டோமேட்டிக்கா ஸ்டேட்மெண்ட் ஜெனரேட் ஆகும். activity. It is a report. Okay. Okay, ma'am.
So that is it, sir. Yeah.
That's it, right?
Yes, sir.
So basically, you covered all. So you will cover in practical all invoice.
Yes,
types,
sir.
right?
Yes, sir.
Transaction
Yes,
type.
sir. Yes, sir.
All transaction type, and you will show one receipt, and you will show one miscellaneous receipt.
Yes, sir.
And in the setups, you directly tell in the system itself, right?
Yes, sir. Yes, sir. That will be showing everything, sir, from proper, setting up how the AR AP
So that
model.
will be good. Okay, setups and all.
So it is just that the concepts, if they just understand what it is when we are doing.
Yeah, that is it.
That's
then only they will know how it is impacting. Okay.
Correct, sir.
Okay, Srikanth and Shankar, நீங்க ரெண்டு பேருமே take an Excel sheet and write all these accounting entry. நான் உங்களை ஆல்ரெடி 2 நோட்ஸ் ப்ரிப்பேர் பண்ண சொன்னேன். இல்ல ஃப்ரீயா இருக்கும்போது நீங்க பண்ணுங்க. Then only you will remember. Okay. Now volume 1, volume 2, R12. Madam, you share my R12 Word files, no?
Yes, sir.
All
Sure,
the 25 volumes you can share to them.
Yes.
So based on that, you can prepare for fusion also.
Correct.
Okay.
Yes, sir. Yes, sir.
So it will be very easier, and for interview purpose or doing any implementation also, you can do a revision.
Yeah.
Because everywhere accounting impact you have to know.
Yes, sir.
AR, AP, GL. Because when we meet a client, at some point of time you need, then you can explain very good. Okay.
Yes, sir.
Okay. Any question you have?
Okay, sir. Sir, Sunday. Sunday leave, sir.
Okay. I think Sunday she will finish. Madam, only fixed asset will be remaining after Sunday.
Yes, sir. Because the problem is, sir, evenings we are not able to access this instance properly.
No problem. Anyway, for him it's not a problem. He is a SCM candidate.
Okay, sir.
So fixed asset not needed, and the cash management also. You before
with AR we
Sunday
should be.
Yeah.
Okay, sir.
I think most probably at least theory it will be finished. Srikanth.
Yes, sir. Yes, sir.
Because after that fixed asset not necessary for you, and also cash management. APAR, I think tomorrow Friday and Sunday she will finish. Okay.
Okay, sir.
Okay.
Okay, sir. Thank you.
Okay, ma'am. Thank you.
Okay. Thank you, everyone. Yeah. Bye.